Director of Financial Planning for Benefit Financial Services Group. In my role, I can help individuals like yourself navigate complex financial topics by providing simple, actionable advice. Today's going to be the first of a 5-part video series focused on financial literacy. We're going to start with the most fundamental building block to your financial success, creating a budget. Now look, I get it. When I say budget, it's going to create feelings of negativity for most individuals. Most people associate a budget with not being able to spend money or being able to do the things that they want to do in life. With a budget, all we're simply trying to do is balance today's wants with tomorrow's needs. Do me a favor and close your eyes for just 1 second. What is that big goal that you want to accomplish in life? For most individuals, it's going to be something like retirement, buying a home, starting a business, getting married. Whatever the case is, it's probably going to cost a lot of money to accomplish that goal. And the budget is the first step to help you accomplish your financial goals. So let's talk about how to budget effectively. Well, with a budget, it's really just simple arithmetic. On one side, we want to write down all our income sources. On the other side, we want to write down all of our expenses. I would recommend using either pen and paper or use an Excel spreadsheet for this. If you don't have a budget template, or if you would like one to make this process easier, you can either reach out to us at financialplanning@bfsg.com or just simply Google budget template and download any one that looks good to you. With your expenses, we want to break them down into 2 types. We first want to take a look at what are called your non-discretionary expenses. These are the things that you have to spend money on each month. Think your basic needs, right? So it's going to be things like your rent or mortgage, your auto insurance, your utilities, items like that. After those are added up, we now want to break down our discretionary expenses. These are the items that you're choosing to spend money on each month. For most of us, it's going to be things like shopping, eating out, or hobbies. So once you've written down your income and expenses, it's just a basic math problem. We take your income, we subtract the expenses, and we find out what's left over. Hopefully it's a positive number that can be used to help build your savings each month. So in that case, we might say that you're making $4,000 a month. Find out your expenses are $3,500 per month. That means at the end of the month, you should have roughly $500 left over to help work towards savings or those goals that you want to accomplish in life. If we find that this is not the case, that means we probably just need to update the budget. Now, realize when we set a budget, it's not a one and done process, okay? Where a budget becomes so important is looking at what we planned on spending versus what we're actually spending. And so when you're doing a budget for the first 2 or 3 months, we want to review it at the end of each month. And we want to update the expenses as needed. So for example, when you first do your budget for the first month, you may think that you're spending about $500 a month to eating out. At the end of the first month, you can look at the budget and say you're spending $1,000 eating out. Okay, well let's update the budget for this new reality, see how things look. And over time, if we find that that is the trend, we just continue to update that budget to the reality of what you're actually spending money on. And it's important to track this over too, because it's going to help you identify easy ways to save some money. Again, the most common one is eating out. I myself, guilty of this. I took a look at my own budget, found out I was spending an easy $200 to $300 more a month than I was planning on. So just a little tightening of the belt gave me extra money to do the other things that I really want to do in life. So let's talk about some common challenges with setting a budget. The first thing is just understanding that a budget is very fluid. Okay, each month we're not spending the exact same amount on the exact same items each month. In fact, some of our bills may come up like once every 6 months or once a year. Maybe you're paying your insurance or property taxes twice a year, things like that. So it makes it a little bit more hard to just budget on the month-to-month basis. So have some grace, have some flexibility with yourself, okay? As I mentioned before, we need to compare what you're actually spending versus what you planned on spending, and begin to make some tough choices on areas that you can maybe save money to help you accomplish those goals faster. Life is complex enough. We want to keep the budget as simple as possible. So I would recommend, if you have access to any kind of software, if you're doing all your banking at one place, your bank may have an app that can help do the budget for you, for example. Those would be great tools or resources to use. If you've never done a budget before and you want to keep things simple, there's 2 different systems out there that I've seen that can be very effective. The first one is promoted by David Ramsey, and that's what's called the envelope system. The idea here is you have your different things that you plan on spending money on. You take cash out of the ATM on payday and you literally put it in an envelope. So using the envelope system, let's say we're looking at expenses for clothes shopping for the month. Let's say you've allotted $100 per paycheck towards buying new clothes. What you do is on payday, you take that $100 out, you withdraw the cash, you put it on that envelope for spending on clothes. When you go shopping, you take the money out of the envelope or you take the envelope with you. But when that envelope is empty, you're done spending on that topic until next payday. So that's one option to use. The other one that I prefer is just using 2 checking accounts. So the idea here is you have one checking account that all your money goes into. This is called your bills account each month. So this is where your income sources all go into this account each month. What we want to do is we want to set up some sort of automatic savings plan each month. So say you're trying to save $200 per month in savings, just set up an automatic transfer of $100 each paycheck, put that money directly into the savings account if you're paid twice per month. Keep things simple and automated as possible. Then what you're going to do is for your non-discretionary expenses, you're going to take, let's say that we find out that's $400 a paycheck or $800 a month. This is your money to spend on whatever it is that you want to do. Golfing, eating out with friends, clothing shopping, whatever hobbies you have. This is your money to do that. And so we put this in a separate checking account and you spend this money however you want to spend it. But when that money is spent, we don't take on debt or we don't take money from the bills account until the next paycheck hits, then we refill that. And so it's kind of like an allowance. Sounds kind of silly, but this has worked tremendously well for myself and for many other individuals over the years. If you have any questions on any of the topics on this video, if you would simply like to learn more, please feel free to reach out to us at financialplanning@bfsg.com. Thank you so much. We look forward to you watching our next video.